Hey everyone, welcome back to the channel. Today, we're diving into permanent life insurance, specifically whole life insurance. If you've ever wondered what it is, how it works, or why people choose it, this video is for you. We'll break it down into simple terms, use clear examples, and make sure you walk away with a solid understanding. Let's get started. 1. What is whole life insurance? Whole life insurance is a type of permanent life insurance. That means it provides coverage for your entire life as long as you pay the premiums. Unlike term life insurance, which only covers you for a set period, like 10 or 20 years, whole life insurance never expires. It's designed to protect your loved ones financially, no matter when you pass away. Here's the key. Whole life insurance has two main components. 1. Death benefit, the amount paid to your beneficiaries when you die. 2. Cash value, a savings account that grows over time, which you can borrow against or withdraw from. Let's break these down further. 2. Features of whole life insurance. Whole life insurance has some unique features that set it apart from other types of insurance. Here's what you need to know. A. Fixed premiums. Your premiums stay the same for the entire life of the policy. Whether you're 30 or 80, you'll pay the same amount every year. This makes it easy to budget for. B. Cash value growth. A portion of your premium goes into a cash value account, which grows over time. This growth is tax deferred, meaning you don't pay taxes on it until you withdraw the money. You can borrow against this cash value or even surrender the policy to get the cash. For example, let's say John buys a $100,000 whole life policy at 30. After 10 years, his cash value grows to $15,000. He can borrow $10,000 for emergencies, paying interest while the remaining $5,000 keeps growing. If he doesn't repay, the loan, plus interest, is deducted from the $100,000 death benefit, leaving $90,000 for his beneficiaries. Cash value is a financial safety net, but borrowing reduces the death benefit. C. Guaranteed death benefit. No matter when you pass away, your beneficiaries will receive the full death benefit. This is a huge advantage for people who want to leave a financial legacy for their loved ones. 3. Types of whole life insurance. Not all whole life policies are the same. Here are the main types. A. Straight whole life. This is the most basic form. You pay level premiums for your entire life, and the policy matures at age 100. If you live to 100, you get the death benefit while you're still alive. B. Limited pay whole life. With this type, you pay premiums for a limited period, like 10 or 20 years. After that, the policy is paid up, meaning you don't have to pay anymore, but you still have coverage for life. For example, Sarah buys a 20-pay whole life policy. She pays premiums for 20 years, and after that, she's covered for life without paying another dime. C. Single premium whole life. This is for people who want to pay one lump sum up front. It's expensive initially, but you're covered for life without worrying about future payments. 4. Cash value. Explained. Let's talk more about the cash value. This is like a savings account inside your policy. Here's how it works. A portion of your premium goes into the cash value. It grows at a guaranteed interest rate, which is set by the insurance company. You can borrow against it or withdraw it, but be careful. Taking too much can reduce your death benefit. For example, if John's policy has a $50,000 cash value, he can borrow $50,000 cash value. He can borrow $20,000 for a home renovation. He'll pay interest on the loan, but the rest of his cash value keeps growing. 5. Pros and cons of whole life insurance. Let's wrap up with the pros and cons of whole life insurance. Pros. 1. Lifetime coverage. You're covered for life. 2. Cash value growth. Builds savings over time. 3. Fixed premiums, easy to budget for. Cons. 1. Higher premiums, more expensive than term life. 2. Complexity. Can be harder to understand than term life. 3. Slow growth. Cash value grows slowly in the early years. And that's whole life insurance in a nutshell. It's a powerful tool for lifelong protection and building cash value. If you found this video helpful, give it a thumbs up, share it with someone who might need it, and don't forget to subscribe for more financial tips. Thanks for watching, and I'll see you in the next video.